Nigeria's GDP rises by 1.5% in the second quarter of 2018, driven by the non-oil sector. Central Bank of Nigeria to stimulate lending through corporate bonds to boost growth. Nigeria gets innovative transport model to overcome haulage challenges for agric products. Plus, British Prime Minister Theresa May to visit Nigeria as part of a trade mission to boost post-Brexit fortunes. This is Business Express coming to you from our Abuja studios with me, Moplan Dakok. You are welcome to the program. Nigeria has recorded a 1.5% GDP growth year-on-year in the second quarter of 2018. The growth was largely driven by the non-oil sector. Amina Nujem has details of the figures.
GDP in real terms in the second quarter of 2018 stood at 16.58 trillion naira. Data released by the National Bureau of Statistics showed that growth in the second quarter 2018 was 0.79 points higher when compared to the second quarter of 2017, which recorded a growth of 0.72%, but 0.45 points slower than 1.95% recorded in the first quarter of 2018. In the quarter under review, aggregate GDP stood at 30.69 trillion naira in nominal terms. This represents a 7.85% increase in the nominal GDP when compared to the preceding quarter and 13.57% increase when compared to the corresponding quarter of 2017, put at 27.03 trillion naira. The Nigerian economy can be classified broadly into oil and non-oil sectors. Broadly speaking, growth in the second quarter 2018 was driven by developments in the non-oil sector, as service sector recorded its strongest positive growth since 2016. However, the relative slower growth when compared to the first quarter of 2018 and second quarter 2017 could be attributed to developments in both the oil and non-oil sectors. Real growth in the oil sector was minus 3.95% year-on-year in the second quarter of 2018, indicating a decrease of 7.48% points relative to the data recorded in the corresponding quarter of 2017. The oil sector recorded a growth rate of minus 8.34% in the second quarter of 2018. The oil sector contributed 8.55% to total real GDP in the second quarter of 2018, down from figures recorded in the corresponding period of 2017 and the preceding quarter, where it contributed 9.04% and 9.61%. The non-oil sector grew by 2.05% in real terms during the reference quarter. This represents 1.60 points increase compared to the rates recorded for the same quarter in 2017 and 1.29 points over the first quarter of 2018. The non-oil sector was mainly driven by information and communication services.
Now, following the release of the latest GDP growth numbers by the National Bureau of Statistics, NBS, the Minister of Budget and National Planning, Senator Udoma Udoh Udoma, says government is encouraged by the continuing growth recorded in the non-oil sector, which grew by 2.05% in the second quarter of 2018. This, he noted, was evidence that the implementation of the targeted policies and programs of the ERGP is yielding positive results. The minister who was reacting to the NBS report says he was happy to see that the Nigerian economy has continued to register positive growth in the first and second quarters of the year in spite of security and other challenges faced by the country. He emphasized that the focus of the ARGP is on diversifying the economy away from dependence on the oil and gas sector and was encouraged that efforts are yielding fruits by the continuing growth in the non-oil sector. The minister noted that this 2.05% growth in the non-oil sector represents the strongest growth in the non-oil GDP since the fourth quarter of 2015. The minister regretted that there was a slight drop in real GDP growth rate for the second quarter, principally as a result of the contraction in the oil sector. Another area of concern for the government was the slightly weaker growth in the agriculture sector, which slowed to 1.19% in the second quarter in 2018, compared to 3.0% in the first quarter of 2018. This is partly attributable to the security challenges, mainly in the northeast and north-central zones. The minister considered that whilst government still has some way to go to achieve the target growth rates of the ERGP, these continuing positive results are signs that they are moving in the right direction, and reiterated the commitment of the Buhari administration to turn this country around to become a productive country. Now, Nigeria's foreign exchange reserves have fallen by $990.98 million this month. Data from the Central Bank of Nigeria shows that the reserves, which stood at $47.11 billion at the end of July, declined to 46.128 billion naira on August 23, 2018. The CBN noted that the evolution of forex market in the country had been influenced by a number of factors such as the changing pattern of international trade, institutional changes in the economy, and the structural shifts in production. Now, the federal government, through the Central Bank of Nigeria, plans to stimulate lending to manufacturers and invest in corporate bonds to revive the economy. Amina Nujem again has details.
119th Monetary Policy Committee meeting of the Central Bank of Nigeria, held on the 23rd and 24th of July 2018, saw the Central Bank Governor Godwin Emefiele introduce the revised guidelines for accessing real sector support facility through the cash reserves requirement regime and corporate bonds.
As a way of incentivizing deposit money banks to increase lending to the manufacturing sector and the agric sector, a differentiated dynamic cash reserve requirement regime will be implemented to direct cheap long-term bank credit at 9% with a minimum tenure of 7 years and 2 years moratorium to the employment elastic sectors of the Nigerian economy.
The Apex Bank, in keeping to its word, is now set to release a 10 billion naira per capita project financing in the agriculture and manufacturing sectors of the economy through commercial banks. This, CBN says, would encourage competitiveness in the export market. The bank, in a statement, pointed out it hopes to achieve the flow of credit to the real sector of the economy, as deposit money banks would henceforth be incentivized to direct affordable long-term bank credit to the manufacturing, agriculture, as well as other sectors considered by the bank as employment and growth stimulating. The move is aimed at consolidating, increasing the flow of credit to the real sector of the Nigerian economy and sustaining Nigeria's economic recovery. The bank had put in place a program under the differentiated cash reserve requirement regime whereby deposit money banks interested in providing credit financing to new projects in the real sector would request for the release of funds from their CRR to finance the project, subject to deposit money banks providing verifiable evidence that the funds shall be directed at the approved projects by the Central Bank of Nigeria. This is the first time in history that manufacturing would have received a fixed interest rate loan for 7 years.
Economic experts have called for the incorporation and sensitization of Nigeria's small and medium enterprises to maximize the benefits of the Nigeria-China currency swap. While describing the policy as model for Nigeria, guests on Good Morning Nigeria are optimistic that the teething problems at the takeoff of the policy can be tackled through continuous engagement with stakeholders. Lydia Sampson has the report.
Nigeria's economic downturn a few years back, occasioned by falling oil prices and foreign exchange volatility, necessitated the need to come up with buffers to mitigate shock and stabilize the economy. This led to the signing of agreement between Nigeria and China on currency swap. Guests on Good Morning Nigeria say the currency swap is already impacting positively on Nigeria's economy. They however lamented that the volume of trading between Nigeria and China is actually higher than what is captured, stressing that only the formal businesses are qualified to benefit from the policy, hence the urgent need to completely formalize.
68.7% of trade imports come from Asian tigers, the Asian tigers, and over 70% of these 68.17 comes directly from China. Then it's very important that we should have had this even earlier.
Whether I would like it or not, we are an informal economy because the majority of business people in Nigeria are in the informal sector. Our system of economy has not enabled them to migrate from the informal to the formal. And that's one of the reasons why we don't get enough tax. It's difficult to tax the informal sector. All we need to do is begin to enable them. This is a policy that is good and can actually enable them to come to the formal sector where they can be able to use these instruments.
What will happen is the fact that the formal people who are engaging in this, because of the benefits of the exchange rate systems that they will be getting, obviously they will be able to land their goods cheaper. And at the end of the day, it's not everybody that needs to import. We can have a big wholesaler here that is importing, and other distributors can come and buy off them.
They call for the shutdown of multiple exchange windows to minimize differences between black markets and the official foreign exchange rates.
Goods are competitive internationally. Goods that come in through this channel will be goods of the best international standard that you get. And the only thing you can say is that Chinese goods may be cheaper, but they must meet the international standards, so dumping will not happen.
The position of China today in the global economy is such that every nation, not just in Africa, everywhere in the world, there is increased trade and interaction with China. So what we are doing is going to be positive for Nigeria. What I think we need to do more, and I want the central bank to do more, is to as well encourage exports as much as we can, not only to China, but to other countries. This certainly will reduce pressure on the exchange rate and will strengthen the Naira.
The guests urged the Central Bank of Nigeria to continue consultations with critical stakeholders to enforce quality international standard of products to be imported from China to Nigeria. In Abuja, Lydia Sampson, NTA News.
The Nigeria Incentives-Based Risk-Sharing System for Agricultural Lending (NISL) is finalizing an innovative transportation system designed to tackle the bottlenecks in the national haulage system for agricultural products. The Secured Agricultural Commodity Route is a targeted multi-pronged system anchored on a dedicated national transportation network whose objective is to achieve a significant reduction in the prices of agricultural commodities by curbing the astronomical losses that occur post-harvest. The route, which cuts across the 11 states in the Lakaji corridor, including Katsina, Jigawa, Kano, Kaduna, Niger, Kwara, Oyo, Osun, Ogun, and Lagos, are expected to take 3 months to implement, starting from August 2018. The United States monthly crude oil import from Nigeria has fallen below 3 million barrels for the first time in more than 2 years, dropping by 62%. The decline in the country's appetite for Nigerian crude followed the upsurge in its production of the commodity. Data from the U.S. Energy Information Administration shows that the U.S. bought 2.89 million barrels of Nigerian crude in May, the lowest since February 2016. The U.S. oil production, which has been booming at record levels in recent months, hit 10.9 million barrels per day in June. The U.S. purchased a total of 24.28 million barrels of Nigerian crude in the first 3 months of this year, down from 25.97 million barrels in the same period last year. And on that note, we take a peek at global commodity prices. Agricultural commodities, including cashew nuts, rubber, cocoa butter, sesame seeds, frozen shrimps, as well as mineral resources and other products with free on board, topped non-oil exports, which generated 57 billion naira for Nigeria in 7 months. Comptroller Jubrin Musa of the Nigerian Customs Service Apapa area at the weekend pointed out that the commodities were exported through the Lagos port between January and July 2018 to Nigeria's major export trading partners, including India, USA, Spain, the Netherlands, and France. The area command in total generated about 210 billion naira from exported commodities in the 7-month period, representing a 6.9% increase over the 197.7 billion naira generated in the corresponding period of 2017. The Observatory of Economic Complexity posits that Nigeria is the 51st largest export economy in the world. British Prime Minister Theresa May is preparing to visit Africa for the first time since becoming Prime Minister in 2016. It is the first visit to sub-Saharan Africa by a British Prime Minister in 5 years. Mrs. May will begin her visit with South Africa on Tuesday before traveling to Nigeria and Kenya as part of a trade mission aimed at boosting post-Brexit fortunes. The Prime Minister said the trip would be a unique opportunity at a unique time for the UK. She noted that the UK wanted to deepen and strengthen its global partnerships as it prepares to leave the EU in 2019. May will be accompanied to the 3 Commonwealth countries by 29-member-strong business delegation. Security issues will also feature on her agenda, and she's expected to discuss the threat to Boko Haram in Nigeria and the role of British troops based in Kenya who are helping countries fight Al-Shabaab militants in Somalia. Mrs. May will meet President Muhammadu Buhari in Abuja on Wednesday before meeting victims of modern slavery in Lagos. Power distribution companies are not only indebted to their counterparts in the electricity generation arm of the sector, they also owe service providers a total of 205.51 billion naira. The service providers in the power sector are the Nigerian Electricity Regulatory Commission, the Nigerian Bulk Electricity Trading PLC, the Transmission Service Provider, the System Operation, and the Market Operator. Figures continued in the August 2018 report represented by the market operators to industry operators showed that the indebtedness of the DISCOs to service providers has been accumulating since the commencement of the transitional electricity market. The market became operational on January 1st, 2015, and its commencement led to the implementation of all contractual obligations in the privatized power sector. The report stated that the 205.5 billion naira was the total indebtedness of the DISCOs of NEC, NBET, and the TCN from January 2015 to June 2018. Meanwhile, there are reports that the republics of Nigeria and Benin have paid $10.1 million as electricity bill to Nigeria to avert being disconnected from their power source after the Nigerian government threatened to disconnect debtors. Bosede Abel is standing by with an update on how the equities market traded last week.
Stock market was brief last week as the federal government of Nigeria declared Tuesday 21st and Wednesday 22nd August 2018 as public holidays in commemoration of Eid Kabir. A total turnover of 968.9 million shares worth 10.2 billion naira in 9,654 deals were traded by investors on the floor of the exchange. The NSE All-Share Index and market capitalization appreciated by 0.45% to close the week at 35,426.17 and 12.9 trillion naira. 15 equities appreciated in price last week, 45 equities depreciated in price, while 109 equities remained unchanged. However, all other indices finished lower with the exception of the NSE Premium, NSE Insurance, NSE Lotus 2 and NSE Industrial Goods indices that rose by 3.15%, 0.78%, 1.10% and 1.96%, while NSE ASM index closed flat. The financial services industry led the activity chart with 874.02 million shares valued at 7.6 billion naira traded in 6,029 deals. The consumer goods industry followed with 26.8 million shares worth 1.6 billion naira in 1,476 deals. The third place was occupied by oil and gas industry with a turnover of 24.7 million shares worth 91.4 million naira in 752 deals. Trading in the top three equities, United Bank for Africa PLC, NEM Insurance PLC and Zenith Bank PLC accounted for 503.9 million shares worth 4.6 billion naira in 1,992 deals. Also traded during the week were a total of 9,205 units of exchange-traded products, ETPs, valued at 201,119.15, executed in 4 deals. A total of 152,741 units of federal government bonds, valued at 179.3 million naira, were traded in 13 deals.
NSE market reports by Bosede Abel. She's still standing by with global market figures.
Markets in Africa closed mixed on Friday. South Africa's JSE Africa Top 40 gained 1.17%, Tunisia's Tunidex 0.37%, while Kenya's Nairobi All-Share declined 0.19% and Ghana's GSE Composite Index also fell 0.17%. European stocks closed higher following the US-China trade talks, which concluded with no concrete steps towards ending the bilateral trade war that started last month. DAX rose 28.94 points to 12,394.52. FTSE 100 advanced 0.19% and closed 7,577.49. And CAC 40 also gained 0.24% and closed 5,432.50. In the United States, the S&P 500 and Nasdaq Composite reached all-time highs as Netflix shares rose. Dow Jones Industrial Average appreciated 0.52%, S&P 500 gained 0.62%, and Nasdaq Composite Index also rose 0.86%. Asia market closed mixed as investors reacted to an escalating trade war between the US and China. Nikkei advanced 0.85% and closed 22,601.77. Shanghai Composite 4.80 points to 2,729.43, while the Hang Seng Index depreciated 0.43% and closed 27,671.87.
That's the much we can take on Business Express today. Do join us again on Wednesday for another edition of the program. I am Moplang Dakok.